Hi everybody, it's Michelle White with Equity Union Real Estate, and I'm very excited today to invite you to listen to my special guest, Ron Henderson with Farmers Insurance, a topic near and dear to all of us. So Ron, why don't you tell us a little bit about yourself?
Well, I'm an over 50-year resident of the Coachella Valley. Grew up, was raised here. I have been in the insurance business for 30 years, all with Farmers Insurance. We've been one of the top-rated farmers agencies, not only here in the Coachella Valley, but also for the entire nation. We have a great little office in Palm Desert with several employees, and we're excited to be here and talk about probably one of the most top-of-mind subject there is right now, which is homeowners insurance.
Well, that's good news because I've got some questions for you. So, question one, what's the biggest misconception homeowners have about insurance in California?
Well, that's a great question, and probably not the answer that a lot of people want to hear, but they're too focused on price. When you get too focused on price, you miss out on coverages. We've seen it all too often. In fact, we have a little saying that 50% of my new business is because of other agents' mistakes. And in homeowners, it's not even other agents. It could be a homeowner mistake as well, because they don't want to pay for it, because it's not going to happen to them. These are things that we hear constantly over and over. And guess what? It happens. And maybe they don't have the right coverage, or most importantly, they're underinsured. That's probably one of the number one things that we have to deal with.
That's scary.
It's very scary. In fact, we're dealing with one right now where one of the houses, I was just on the phone with the client before I came here. Her house burnt down and her agent wrote it incorrectly. And it's literally going to cost her thousands of dollars a month in loss of rental income because they put the house as a homeowner and not as a landlord rental property.
Oh, good point.
Yes.
So another question, what's the number one mistake buyers make when shopping for insurance?
So again, it's about price, right? It has to be within reason, right? We have to talk about being in the right marketplace and the right price, but don't be underinsured and caught without it. Probably the biggest thing is, besides being underinsured on value of your home, is liability. Ooh. It's a big one. I could tell you liability stories that, of course, it would never happen to them, but it does.
Until it does.
Until it does is exactly right.
So how fast can you get a quote for someone in escrow? That's a big one, especially for our buyers.
Especially for the real estate market, we can do it same day. Now, One of the reasons why we're talking is about the craziness of the California insurance market. And as of today, Farmers is one of the very few, less than a handful of carriers that are actually writing insurance today. And the difference is, and this is something that is going on in the marketplace, is that people are literally going to insurance carriers they've never heard of, only because that agent that they're dealing with doesn't have access to what I would call a preferred carrier. Now, here's the real scary part about it, is that some of these carriers are non-admitted carriers in California.
What does that mean?
It means that in California, a company like Farmers and State Farm and Allstate, they're all admitted carriers to the state of California. So if something were to happen financially to that company, the state of California backs it and they'll take care of the claims. So it's a big talking point right now. Now, who would have ever thought that a company like Farmers or State Farm would be having trouble? Well, guess what? State Farm just went to the Department of Insurance and said, if we don't get price increases, we may be on the brink of bankruptcy.
Wow.
That's scary.
It's really scary.
So back to your point about making sure that you're with the right carrier, making sure that it's admitted. So an unadmitted carrier has no financial guarantee from the state of California. So they go out of business because they wrote too much business and there was a big fire like the Paradise Fire in Los Angeles. They might not have coverage.
Wow.
That's even worse, right? But because it's a volatile market right now, there are people that have to go to a non-admitted carrier. But you have to be very careful about it. Check out the financial strength of them. But I am here to tell you that there are a handful of preferred carriers like Farmers that is writing business today. And for you escrow people and real estate agents and new buyers, yes, we can get you coverage within a day.
Wow. Because we're under a tight timeline within our contract to get that done.
Especially now because of new rules, right?
Right.
And it came up because of the volatility in the insurance market. So there's now a new rule, I believe, correct me if I'm not wrong, within 17 days, you need to secure insurance. Otherwise, you have to remove contingencies and hope you get insurance.
100%.
Yeah, that's not the way that new buyers want to be, nor as you as a real estate agent want to be in that position.
No, absolutely not. So what's one thing buyers should always look for in a homeowner's policy?
So we're going to go back to coverage, but let's start with what we just talked about. Is the company admitted or non-admitted? Because it's going to make a difference, right? It could very well make a difference in how their coverage can be covered, unless there's a financial ruin of that company. But the second thing is coverage. You know, I get too many times where a client says, well, I could build it for less. Well, guess what? I've also been in that situation when that same person had an extreme claim and they couldn't build it for less. People don't understand that in a devastating fire, what it costs to rebuild a home. I'm going to give you an example. A $500,000 home that burns down to the ground is almost a $2 million claim. People don't realize that. That's pretty incredible. We got to repay back the $500,000 to rebuild, right?
Right.
Plus we have our contents, all of our family jewels and belongings, but we also have to pay for demolition. We also have to pay for permits. We have to pay for licensing. And guess what? It doesn't happen overnight. One of the biggest problems we're having with the Paradise Fire is they're literally going to be 3 and 4 years down the line before they can rebuild. So it takes a lot of money. It's not just the cost of the house. There's so much more to a claim that happens. Make sure you are properly covered.
If I'm a buyer, how do I find out if they're admitted or unadmitted?
It's a very simple question because they have to disclose that it's a non-admitted carrier, and you actually have to sign disclosures saying that you know it's a non-admitted carrier.
Wow. Well, that's good.
It is good.
As long as the buyer understands what that is.
That's right. And probably the biggest thing because of that and because of everything that's going on, please review your policy annually. You know, things have really gotten out of hand over the last few years. I'm going to call it since COVID. We have had the highest inflation we've had in decades, right? And just as an example, a cost of plywood that was $25 is now $125. Drywall that was X amount is now 3 and 4 times that. So guess what? The cost to build is a lot more. And people who bought a $500,000 house don't realize that all of a sudden the rebuild, and I'm going to get to that here in a second, the rebuild is now $800,000. So what I wanted to get back to is just because you bought a house for $1 million, you still may be having to insure it for $1.25 million. There's a lot of conditions and circumstances about it. But just because you paid X amount for a house, I have been in this business where people have bought a $500,000 house, but I could rebuild it for $750,000. And people bought $1 million house and it's going to cost $1.3 million to rebuild because of what's going on in the economy, the availability of contractors. It all makes a difference in what's going on.
It really does.
It does.
So we kind of touched on this, but what affects the price of insurance most in California?
Oh boy, and that's really a hot topic right now. First, location. So the big key word is fire line. Are you in a fire line? Now, thankfully, in the desert, we have very few areas that are affected by fire line. However, once we start going up the hill toward Idlewild or Big Bear or some other areas, they become high fire line areas. Number one, not too many insurers are insuring those areas anymore. We have to go to what is called the California Fair Plan and then bundle it with what we call a wraparound or differences in conditions policy. So it makes a big difference. So location is number one.
So if I'm in a high fire risk area, I can still get insurance.
You absolutely can. Probably not at the price you want and probably not at the price you were used to if you've been living in an area for a long time. The prices really have gone up. The second part of your question is condition of property. So I kind of explain it this way. We just had a client where they have an apartment building and they wanted to get it insured. And they said, well, how much will it cost? And I said, it depends. It depends on condition. Have we been taking care of the property? Have we repainted, made it look beautiful, trimmed the trees, trimmed the bushes, and done the maintenance that we need to do? That's number one. Number two is upgrades. Insurance companies are going to get tighter and tighter on doing upgrades. And here's the key areas: air conditioning, plumbing, electrical, and the roof. Some carriers now, because the number one claim that everybody's having is their water losses. So now we're having people install water leak detection. Okay? So this is really going to help us prevent the large water losses. We actually just had a claim in Palm Springs. Unfortunately, the resident, the homeowner was not there, and there was a water loss, $200,000.
Wow.
Nobody expects that, right? This could have been prevented had she had a water leak detection system. And by the way, in just 18 months of farmers requiring it on certain properties, we've lowered our water claims by 70%.
Wow.
That's amazing, right?
Well, I'm glad that I have one at my house.
Yes, but also prior claims. Now, this gets a little sticky because people buying a new home don't know what the claims are on the prior house unless it's been disclosed. And I can tell you in more than one or two instances, this is the first time the buyer has heard about a prior claim. Especially if it's a water claim, it could be a problem. So it's really important for the selling agents to ask about any prior claims. They have to disclose it, right? You know that. But especially water claims. Now here's the other part of it. Especially on a water claim, what mitigation has been done? They need proof. So any proof of the construction that was done or in anything else that was done to mitigate another loss needs to be proven. And even with that, most companies, not just farmers, they're going to require like the Moen flow water leak detection system, or number two, they'll make it a mandatory higher deductible just for water.
So on the listing side, it's good to note that we got to make sure that on our disclosures, it's properly disclosed.
That's correct.
And have backup documentation.
That's correct.
If there's been a claim.
So back to my example on the apartment. So had this apartment building done the roof upgrade, the electrical upgrade, by the way, in this particular case, the electrical went back to the 1960s.
Wow.
And the roof and the electrical and all of this, I could have gotten them a price here. But because the upgrades weren't done, the price went way up here.
Yikes.
Because there's the bigger risk. We're just waiting for something to happen. So the biggest thing that homeowners, home buyers need to know, insurance, a homeowner's policy isn't about a bad day. Here's what I call a bad day. A water line breaks and you go home and yeah, it's a mess, right? Yes, you're insured for it, but do you really want to put in a claim for that? Because a claim is going to stay on your insurance policy for 3 years and it is going to increase your price. So is it a bad day or is it a devastating day?
So what do? Do you report the claim or not report it?
Have a talk with your insurance agent. So talk to them because let's say that you have a $2,500 deductible or higher, right? And let's say that you go out and your contractor comes out and takes a look at it. Well, it's going to be $3,000. Well, do you really want to file a claim to get back $500? It may not be worth it, right? So more and more and more, we're seeing homeowners literally going to $5,000 and $10,000 deductibles to
Wow.
keep the price in check. So it does make a difference.
That's interesting. I wouldn't have thought of that.
So when there's a claim, and what this needs to be really said, the number one responsibility of the homeowner is for them to prevent any further damage. It's in every insurance contract. You call the plumber before you call me because I can't fix it, right? Call your plumber on a water leak or call somebody that is a specialist in whatever went wrong. But make sure that you're going to do the best to prevent further damage. And a great example is not doing anything, and now we have mold.
Yeah, that's not good.
That's really not good. And by the way, most insurance policies will not cover mold, or even if they do, it's at a very small amount.
Wow. Well, those are wonderful pointers. Thank you.
Yes, you're very welcome.
So let's see. What's the most underrated coverage people skip but absolutely shouldn't?
Liability.
Oh,
Liability. Most people really, it's a second thought, right? And again, it's not going to happen to me. I'll make sure it's not going to happen to me. But I could tell you about claims. Someone, and this actually was at my godfather's house.
oh my gosh.
Somebody missed a step, fell and broke a hip. Guess what? It's a liability claim against the homeowner, even though that it wasn't a direct thing that they were negligible, but it is a homeowner claim. They tripped and fell, right? It happens. Here's another one, and this was scary. A homeowner was having a party, and in the back, he locked up his dogs. And everybody's having a party, and they had a caterer there, and the caterer went to the back to put the trash away. And he let the dogs out.
Oh no.
And unfortunately, the caterer passed from injuries from the dog bite. Now, how
Oh
much
my
liability
gosh.
do you want? So it's not just the possibility of somebody drowning in a pool, which we're very cognizant about here in the desert. It's the trip and falls. It's the dog bites. It's so much more. Make sure you have liability, but also make sure you have the right policy. Don't be that person that had a homeowner policy when it was being rented out. And is it rented out as an Airbnb or is it rented out long-term, 6 to 12 months?
So those are different.
It makes a big difference in the policy. Now, here's what happens. If you have the wrong policy, you're giving the insurance company a reason to deny your claim.
Oh my gosh.
It's a misstatement of facts. So don't put yourself in that position.
So if I have a short-term rental, say for instance a home where I rent out for Coachella
Correct.
or Stagecoach.
That's right.
What kind of coverage do I need to have?
It is a short-term rental policy that several carriers can offer. And very specialized.
Good to know.
And especially make sure you have a liability on that because you don't know what they're doing. We've heard the stories, right? Especially during Coachella and Stagecoach. I mean, there are new rules because of Coachella and Stagecoach in the Valley because of rentals, right?
That's a really good point.
Yes, exactly.
So, working with an agent, why should a buyer talk to a real estate agent instead of getting an insurance outline?
Local knowledge. You know, the Coachella Valley especially, right? But you could really say this about any area. We're very diverse. Mm-hmm. We have homes that are $300,000. We have homes that are literally $20+ million.
That's true.
And if you're sitting in Des Moines, Iowa, or God forbid, an out-of-country rep, they have no idea what the values are. You need somebody locally to help determine the values. That's really big. It's even more important if you're an owner of a condominium unit because there's actually more involved because you need to understand what each HOA rules are based on the CC&Rs. This is a big mistake that's being made that a large majority of the HOAs cover the outside of the unit, right? Mm-hmm. So a large majority of them require the unit owner, the homeowner, to make sure they insure floors, walls, ceilings, and cabinets. And we just did a review yesterday, and the man was living in a beautiful condominium, and all he had was $20,000 of coverage.
Ooh.
Exactly. How many cabinets will that cover? Not many. How much of the floor do you want covered with $20,000? Not the entire unit. You got to make sure you have the right coverages, right? So having somebody with that local knowledge that's dealt with all these HOAs, that's dealt with all the different neighborhoods, we're going to be able to know how to insure you best.
What about earthquake insurance?
So again, it's about a 50-50 coverage that people are taking or not taking, right? Mm-hmm. I think we all can agree the next earthquake is coming. We just don't know when. So as an insurance agent, you really need to consider it. Again, it's the difference between a bad day and a devastating day, right? We don't know how big the next big earthquake is going to be. I've lived through some. I've been through the LA earthquake. I've been through the big one that was out here that caused significant damage. It's definitely something that people need to talk about. There are ways to lower the premium again by how big of a deductible you want to take to make it more affordable. Don't rely on the government plans because it's not as nice, it's not as easy as it may seem, and the money isn't as free as people think. FEMA's not going to come in here and just hand you a bunch of money. And now do you want 2 mortgages?
Oh boy.
Because you still got the first mortgage, and now you got to pay off maybe another mortgage to help rebuild, right? So you really got to think about where you're at financially and what kind of position you want for long-term goals.
Geez, I better check my own policy.
You better.
How do you help people who are buying a home last minute and need a binder fast?
We make it a top priority in our agency. We get calls regularly. And again, it's a little surprising to us because of the new laws. But it does happen. And maybe it was because they went to an agent and the agent said, yeah, we can get you insurance. But guess what? Because of underwriting rules or past claims or other situations, they didn't qualify. So it put them in a bad position, right? So, yes. So not only as a farmer's agent do I have farmers, but I'm also a broker. So we have access to all these other, what we call specialty carriers for special conditions, special conditions or whatever, right? To make sure we can find them the right coverage.
So if a buyer works with you and farmers can't accommodate a policy, you can outsource that.
100%. And we work with a lot of top carriers. And I like to say the reason why I went to Farmers Insurance is, and no knock on State Farm and no knock on the other carriers, they can only write State Farm. They can only write Allstate. They can only write AAA. Farmers gives me the right to go out and search for the right policy for that customer.
I love that.
I do too. That's why I chose them.
So, I was going to ask you what makes farmers different from other carriers, but I think you just answered it.
Well, I'm going to tell you, I have a better answer. I just
Okay.
had a meeting last Monday with the CEO of our company, and he said it so eloquently. He said it so perfectly. All this trouble that we had through COVID and all the insurance crises that we have gone through, and trust me, farmers went through it, as did everybody else. We went through it, but we stayed open. You can rely on us. Our foundation, which is what we call our surplus goods, right? This is the money that we save to take care of catastrophes like the Paradise Fire, right? The Palisades Fire, all of those fires. You can be rest assured we have the money. And because we can do that, we can remain open to do business at a fair price. And that is our number one concern. We want to be very consistent with our clients, and we want everybody to know that that's the way we're going to do business. We're going to give you a great policy. And the one thing that we have at Farmers, we shine at taking care of a claim. I can't tell you how many times I've actually been at a house fire while the house was still on fire. And we made sure that those homeowners had a place to eat and sleep, and we've already gotten them clothes that they didn't have. So that's the one thing about Farmers I love. We're fair. We take care of our clients. That's our number one concern, is to make sure our clients are being taken care of. But we're open for business, and we're financially stable to take care of anything that we need to take care of.
I love that. There's a lot of comfort in that.
There is, to know that you're going to be taken care of no matter what.
That's wonderful.
Yeah.
What's the craziest thing you've seen affect someone's insurance?
Well, when I saw the question, I had to think about it. And I got one story that didn't happen to one of my clients personally, and one story that did. And probably the craziest story was a bear literally broke into a house and completely destroyed it. In fact, you may have seen it. We turned it into a commercial with our Professor Burke. But a bear literally broke into a house.
For real.
For real. And destroyed it. So that was the craziest. The second one is, I wouldn't say it's crazy, but to me it was the most endearing. So I had a client literally in the last 8-9 months that came into my office and requested a review of their policies. And we're reviewing the homeowners, and we're reviewing the autos and the umbrella policy. And she says, Mr. Henderson, there's a charge on my bank account to Farmers, and I don't know what it was. And we looked it up. I said, whoa, that's a life policy on your husband. She broke down and cried.
Oh.
Her husband died the week before.
Oh my gosh.
So the cool part was we were able to give that family $400,000 that they never even knew they had.
Wow.
So that to me was the craziest.
That's a big one.
Yes. And the most enjoyment I have as an agent.
Yes.
Yes.
Oh, that's terrific.
Yeah, that's awesome.
What do you, well, I think you almost answered this, but what do you personally love about helping homeowners?
You know, I love helping them in a time of need. And I want them to know that they're going to be taken care of. I don't need them to worry about coverages. Some people will argue that they can do it, or they can do this, or they can do that.
For less.
For less, or I don't need as much. But I want to make sure that when that devastating day comes, they're going to be taken care of. And it's not just the farmer's claims office. They've got myself and my staff that's going to be there. And I mean it. I've literally been there as the house was burning down.
Wow, it's just...
And to give them a spare coat, or give them a spare blanket, or bring them pizza just to comfort them while they're watching this devastating event happen at their home, is very comforting to me.
And my last question before we move on to any other topics, if you could give every new homeowner one piece of advice in 10 seconds, what would it be?
Work with a local, knowledgeable, reputable agent, because they're going to know how to take care of you best. Make sure you're working with an admitted carrier to ensure you're going to get paid on claims, and do your reviews. Things change, especially lately. Things change rapidly. Make sure you have the right coverages.
Boy, those are good tips.
That's right.
And I'm happy to share those with my buyers and my sellers too, because they're going to go somewhere as well.
That's right.
Anything else that you can share in addition to homeowners insurance that is important for residents here in the Coachella Valley to know?
Well, we kind of talked about a lot of things that people need to do a self-check on, right? Liability is a big thing, especially on auto insurance. I can't tell you how many times there's an accident and they hit a car that was so much more than they had insurance for. So in auto insurance, one of the coverages is what is called property damage coverage. And state minimums are only $10,000, right?
Which is nothing.
How many $10,000 cars are in your parking lot right now? How many $50,000 cars are? They're more, right?
Especially here.
I said, make sure you hit a car that isn't valued this much. And here's the real sad part about it. To go from $10,000 or $25,000 to $50,000 or $100,000 or even $250,000 for coverage is not that much money.
Wow.
But too many agents focus on trying to get the price the lowest to get the buy, right? You can't do that. You got to give them the coverage, because I don't want that lawsuit for an attorney saying you didn't offer them the higher coverage.
Wow.
So we want to fully explain those coverages. And you got to know what it means. Buy umbrella insurance. It's the cheapest $1 million you'll ever have in your life. And if something happened, and I'm going to tell you a real quick claim. The owner of a construction company that I insured, there was a claim. And I had it documented 7 times that we offered him an umbrella. We knew that he was worth $4 million. Assets, $4 million. No, I'm not going to buy an umbrella. No, I'm not. But I'm going to keep offering it. Well, guess what? Got into an accident.
Oh, no.
And not only did he get sued, but he sued me as an agent. But all I had to do is print out my documentation that we offered him extra insurance through an umbrella. Now here's the ironic part. He came into the office with his head between his tail. I need an umbrella policy. Yes, you do. And we offered him a $5 million policy. No, I'm sorry, I just want $1 million. So kind of back to one of the earlier questions, people think they're covered because they have an insurance policy. Each policy is only up to its specific limits. Just because you have insurance does not mean you're covered. You got to make sure you have the right limits. You got to make sure you have the right coverage.
Good point. So, in addition to homeowners insurance, and I know you carry the personal lines, what other kinds of services or insurance do you offer?
Well, thanks for asking. Probably one of my greatest passions is Medicare. And of course, Medicare is for people age 65 and older. And it's the most wonderful insurance, again, if you get the right policy. This year, going into 2026, there have been so many changes. And I highly encourage everybody who is on Medicare to review your policies with a licensed Medicare agent. It is so important, especially because prescriptions are changing, especially because coverages are being reduced. Doctors are no longer accepting some of these plans. And you're going to go in on January 1 to a doctor and he goes, well, I'm no longer in your network. Oh, no. Or you're going to go to the pharmacy and say, well, why was that so much? Well, this is no longer covered by your insurance.
I'll bet you most people don't really know what kind of Medicare coverage they even have.
They don't. And here, and this is the pet peeve. And one of my best friends just did this to me. I really like my policy. I'm staying where I'm at. Okay. But do you know what it's going to be like in 2026? I don't know what you mean, Ron. Your plan changed. Oh my gosh. Well, you were sent an annual notice of change back in September. I know you failed to read it. In fact, you didn't know that the price of your policy more than tripled, and they had no idea.
Wow.
But he was satisfied with it. It was okay until I showed him and we told him that it no longer was the best fit for what their needs were.
What is there a deadline for this year to make changes?
Yes. So this is what we call annual enrollment period between the October 15th and December 7th.
Wow.
Now this is only for Medicare Advantage plans. Mostly those are the HMO plans and your prescription plans. So people who have Medicare supplement plans have a standalone prescription plan. Those need to be reviewed. And you also need to review your prescriptions in your Medicare Advantage, they call them MAPDs, Medicare Advantage Part D plans, because they're integrated. But those plans have changed as well. And a lot of plans, due to all the changes and what's going on with the government, they had to make some changes in benefits in order to stay profitable. So please get a hold of myself or a licensed Medicare agent to review your plans and talk about options.
And what's that date again?
December 7th is the end date.
It's right around the corner.
We tell people we need to talk to our Medicare members twice a year. Once at the annual enrollment period and once at their birthday. Because that way we can always stay on top of what their needs and benefits are to make sure they're still on the best plan for them.
Good information. Right around the corner. I'm repeating myself, but it's super important. So this is a wealth of information, lots and lots of good stuff.
Thank you.
And I know following this interview, you're probably going to get flooded with calls.
I hope so.
So tell our populace and everybody, how do they get a hold of you?
Okay, so you can give us a call at the office, 760-773-8787, or you can email me, Ron, at ronhenderson, INS as in insurance.com. Ron at ronhenderson, INS.com.
Very well. That's wonderful. Thank you, and thank you for joining me today for Michelle's Market Minute.
Thank you.